Travillian Next is a division of Travillian, a financial services specialist search and talent advisory firm. Since inception, the Travillian team has dedicated itself to enhancing the return on investment of a company's most important resource, its people.
Welcome, welcome. The last chat of the year, and very happy to have Paul Davis here from Strategic Resource Management to talk about the trends of 2023, but also what's coming up in 2024. So welcome, Paul. I know we've got to know each other over the past 6 to 12 months. Very glad to have you here.
Yeah, thanks, Keith. It's been a very exciting 6 to 12 months too, to be sure. But yeah, I'm glad that we've gotten better acquainted over the course of the year, and kind of looking forward to what we're going to see in 2024.
Yeah, man, it's a pretty exciting time to be talking about banking and fintech and everything that's happening in the community bank sector. Your background really is great for this chat because you've been in this business for decades. No, you have ample experience, American banker, and now it's strategic resource management. Do you want to just give a little overview of your background and kind of what you're doing now?
Yeah, sure. So, as you mentioned, I've been involved in financial services industry as an observer for the bulk of my professional career. Like you and I were talking about, I started out with S&L Financial back in the late 90s. Yeah. So that's how far back the experience goes. I spent 16 years at American Banker. The last 5 of that time, I was the community banking and M&A editor. So, covering pretty much all this, banks up to 15, 20 billion of assets. So that was really great. Moved about 2 years ago to Strategic Resource Management. It's an advisory consulting company that focuses on banks and credit unions, helps with their vendor management and strategic planning. And then also, I run a newsletter called thebankslate.com that also continues to hone my financial journalism skills. So we cover banking, we cover fintech, we cover the regulatory environment with a regular Monday morning newsletter. So,
wow, dude, yeah, I'm a subscriber, and I am a happy subscriber. Great information in there. Just saw the latest one come through this morning, and fantastic insights, Q&A. You have some great guests on there for Q&A, and just things I wouldn't even know are happening in the industry. You have summaries at the bottom. It's fantastic.
Well, I appreciate it. The goal there is obviously people don't have a lot of time on their hands, so I just try to give it, easy, snackable, digestible, content. I mean, if you want to go to the website and read the article, that's great. But the newsletter itself basically is just that idea of, you get through the weekend, you want to kind of recap and have a sense of where we've been so that you can plan your week. My goal is, make it as efficient as possible for people.
Yeah, quick hits. It's fantastic. Easily digestible, as they say.
For sure.
So no, your background's fantastic. You're really, ingrained in the industry. You see what's happening from a lot of different angles. So if you had to kind of sum up 2023 for community banking, how would you sum that up in a few sentences if you could? But, what highlights would you kind of want to look at and say this was kind of the year of? Yeah. You have kind of any thoughts there?
I would just say that it was a year of adjustment for the community banking space, both in terms of the old and the new. Saying that, by old, I mean, there were things that I think community banks or the banking industry maybe had taken for granted for the last few years, in particular deposits, liquidity. I mean, there was just so many deposits in the system that you really didn't have to work too hard to have that liquidity. We saw, obviously, the I'll call it the panic that happened in March and April, kind of then transition more into a retain and attract deposits kind of strategy. So things like balance sheet management, took on new meaning over the course of the year. That's kind of the old. Then you layer in the new, and that is really adjusting to the technology space in a way that we hadn't before. Yes, COVID accelerated digital channels, but I think we saw even that next step of how do you play offense and defense and use technology to kind of further that goal. So
Yeah, no, I agree. It was kind of an adjustment period. From our perspective, working with a lot of BaaS banks, regulation and compliance came into view a lot more. The government kind of looking more at these fintech partnerships, fintech relationships. But getting back to basics too of treasury and balance sheet management, while also kind of looking at technology is always at the forefront of what we're looking at here at Travillian. Um, News actually broke last week. Just a little teaser, just a little plug for Travillian. We're launching a tech and innovation group starting in January here, and I'll be running that group, focused on those roles that kind of get deeper into data science and engineering and product that cuts across not just community banking, but also to their partners, whether it's BaaS partners, RegTech, FinTech partners. I say that because the lines are getting very blurred between technology and the banking customer experience. And as we move into even more, the younger generation coming into the banking system, it's going to become even more blurred. So technology, as is at the forefront of, I think, most of the decisions and strategy for community banks right now, as it should be. But it's not easy. It's not easy. I understand that. And it takes talent. It takes the right strategy. But heading into 2024, Paul, what do you think is going? I mean, I hate to be, nobody could have, seen what was going to happen in 2020. Nobody really forecasted what was going to happen this year with Silicon Valley and those banks. What do you think as banks, because you speak with a lot of CEOs, what's top of mind heading into 2024?
Yeah, no, and I'll caveat this. Obviously, these are my opinions,
Yeah, of course.
reflective of my employer. But I think to your point, first of all, I'll say to your point, every aspect of banking has this overlay of technology now. People are either already layering in a technology innovation or they're evaluating it. So that's one thing, right? We're going to go into the new year and everybody's going to say, how can I apply technology to risk management, to balance sheet growth, to even hiring and recruit? I mean, every aspect of the industry is going to have a technology fingerprints on it, right? So that's number one. Number two, you mentioned regulation. We're going to see a lot of stuff, I think, out of Washington next year. I mean, there are a lot of proposals out there seeking comment on everything from debt to corporate governance, AI, you name it. So you're talking the Fed, OCC, FDIC, CFPB. Everybody has these proposals out or guidance out that's going to influence and shape the industry. And then the other thing you just really have to look at, bankers are talking to me more about just trying to assess things like instant payments. Do we get involved with FedNow, right? It's most of those are doing receive only. Do you eventually get into the send side of instant payments? You're looking at, BaaS, that there's been a little bit of a adjustment period there. Some folks I think grew too fast. The regulators are trying to say, whoa, slow it down a little bit. And I think, we'll see in that space, real standouts, kind of the folks who really had their compliance in line, have their I's dotted, T's crossed. Those guys are going to continue to gain traction. And we'll kind of see who's really in that space for the long run as well. So, I mean, I think those are some of the things that we'll look at for sure. And then, we'll talk more about M&A, but I do think, we had a very sluggish M&A environment this year, as people were just kind of recalculating the deals, looking at the math. And we'll talk more in detail, but I do think we'll start to see some of that accelerate as people kind of get adjusted to get their numbers kind of reset, recalibrated, and move forward.
Yeah, no, definitely for BaaS. We work with a lot of BaaS banks, and we talk with a lot of banks that are thinking about pursuing BaaS.
Hmm.
Uh, and this year really, was the advice, especially post kind of Silicon Valley and post March. Take a step back, make sure you have the infrastructure
Right.
before you just jump in there. You have to have the foundation. I always like to say you have to have the offensive line before you
Hmm.
can, build the West Coast offense. Uh, so make sure you have the right risk and compliance. Make sure you have the right legal, whatever it is
And
that
you're
you're trying to
you're
do.
vetting your partners very carefully.
Vetting your partners, yes. So technology actually helps with that too, with a lot of new reg tech,
Hmm.
compliance type fintech, reg tech uh, companies that can be utilized. Like you said, even if you're not looking at BaaS, you can use this new technology with partnerships with fintechs for efficiency, uh, cutting down on time for loans, time for new account opening, because everything's moving fast now. Customers
They
are
expect
looking,
that. Customers
expect it.
expect that
Yeah, we
convenience
have it in our
and
everyday life.
expediency.
Yeah,
Yeah.
we have it in our everyday life from Uber to Netflix to Amazon. We're not going to sit there for 3 hours and wait for an account to be opened. But also from a risk and compliance standpoint, um, audit standpoint, I don't even want to touch on AI right now because that's
Mm.
kind of the buzzword. And I have read a lot of articles on AI. I'm not exactly sure how it's going to fit into the community bank model, but it will somehow. I don't know where, but if the big banks are investing in it, if the regional banks are investing in it, I don't want the community banks to be left out in the cold. So I
Oh, for
know there's
sure.
good fintechs out there working on great products, but at the same time, that brings risk and regulation and talent and different areas into play.
And it
So
costs real money to innovate and be a tech forward financial institution.
yeah,
So it
it
takes a
does.
financial commitment as well as risk appetite and risk controls to really take that big leap forward.
Yeah, it's risky, and but the risk of not doing it, I think, is beyond the risk of doing it. Just because if you don't, I don't know. This is just my opinion, of course. I just don't know how you grow, keep your customers, bring in new customers. Um,
Well, I mean,
but that
certainly you also have your shareholder base. You have so many folks you have to consider, right? It's that
yes,
delicate balancing act, right, between generating acceptable returns to your investors, appropriately serving your customers, but not overstepping and running afoul of your regulators, you know?
exactly. The balance. It is. It's
Yeah.
it's definitely a balance. You have to do it the right way, and that comes with the right strategy and the right talent.
Well, and that's where you
Um,
guys come in, right? Is like
yeah,
just try to find the right folks to insert, put them on the team, and then contribute and hopefully help people with that kind of stuff.
yeah.
Yeah.
Experience and talking with the right people, talking with somebody who's done it before. Um, speaking with different companies or banks that have implemented what you're trying to do
Hmm.
and have done it successfully
Yeah.
is key. I mean, you have the pioneers out there, the Coastals, the Cross Rivers, the
Hmm.
Lincoln Savings Banks of the world, who have done it. They've gone through the mud and been hit and the winters, and uh they can give you advice
Right.
on how to proceed. um and I'm relatively sure they're going to tell you, make sure you have a good compliance and risk team in place, because the regulators are going to be looking at these vast banks a lot harder. But like you said, the ones who had invested for the last 5 years, as we get more into embedded banking, uh there's a lot of fintechs looking for good partners.
Hmm.
Just not enough out there. There's not enough good BaaS banks for all these fintechs. They're looking for that partner. They're going to reap the rewards
Hmm.
of, you know, uh, fee income, non-interest income, non-NIM. Um, so yeah, we're going to see a lot more of that. I think AI, from my perspective in 2024, from a talent perspective too, is figuring out kind of how this AI talent is going to fit into community banks, whether it's
Right.
from fintech partnerships, whether it's from somebody who's an AI kind of overseer within the bank. But it's coming, and it's it's coming fast, man. And
Well, I think with that, we're just
yeah,
going to have to see what the use cases are. I mean, there's going to be probably larger banks are going to kind of spur that, and as we see people finding ways to turn it from a shiny object to a real,
yeah,
functional piece of the puzzle, then we'll see more folks fall in line. I do think that's going to be, it's interesting. Charles Potts from ICBA and I were talking about this last week, in fact, that oftentimes it takes a while from a tech innovation to go from being a shiny object to an applicable piece of the puzzle.
exactly.
AI, it seems like it went from just being this theoretical thing just a few months ago to really being applied in various functions of the banking industry. So I mean that turnaround and that evolution was a short cycle compared to some of previous innovations.
Yeah, that's what I mean. It's just a kind of like, wow, it's already being used for
Yeah.
this. And I was at the American Fintech Council summit about a month ago, policy summit in Washington, and AI was a topic that came up a lot from a regulatory ethics
Mm-hmm.
point of view. So it's on the mind of the government, and these were people in the government who were
Right.
speaking. Um, so it's on their mind. It's on the mind of auditors and regulators. So yeah, there's not really a lot of guidance right now, I think,
Right. Right. Well,
but
I think there's a proposal out looking for some AI guidance. The White House came out with an executive order with some guardrails. And we've talked about this in the past. It's the same with blockchain. It's the same with BaaS. Some level of regulation is a positive thing because at least it gives you a sense of what the rules of the road are. I mean, even with the reg orders for BaaS that we saw with Blue Ridge and Cross River, at least the regulators gave a pronouncement and said, these are our expectations, right?
yep,
As long as those expectations are consistently applied, then that helps reduce, any kind of uncertainty or on the part of a bank anyway about, I want to get involved with this, but how do I do it without, stubbing my toe and getting an enforcement action?
exactly. Yeah, the guidance has to come from, you're almost playing the game without referees, and you don't know what the rules are. So
Building a plane while it's in flight.
yeah, well, yeah.
You
So
know?
you could do as much as you want, but communicating with the regulators is huge. Uh, Another area, we saw a lot of. There's a company called Clarivis. I
Mhm.
had Kim Snyder on. I think
Yep.
she's in Virginia. And yeah, data analytics, data science. That's something community banks can tap into relatively quickly with technology.
Oh,
Um,
100%.
yeah, sitting on a oil field, I like to say, of data,
Right.
decades, and they don't really know how to tap into it. There's technology out there like Clarivis and other companies that can, sit on top of your core and give you an easy way to digest what's happening with your bank. Because if you can't measure it, how are you going to manage it? That's always something I like to say, especially a bank, which is based on numbers and
Hmm.
changes in deposits. But yeah, there's new technology. You don't have to build it in house. You can really partner with the right people who
Right.
understand your challenges. And yeah, just throw it over to you on that kind of.
Yeah, no, that's true. I mean, again, that's funny because Charles and I talked about that also. As data analytics is really maybe the bigger push forward for community banks than AI. It's AI. I think will have a role longer term of parsing through the data and making sense of it. But yeah, how do you harness all this information that you have? And to your other point, I mean, the other thing, I'm thinking, we talk about this at SRM all the time, is how are you going to layer in this new technology with your core provider, your core system, right? And so there's going to be some times where they can work together. The APIs are going to work fine. But then there's also this big push to looking at middleware, being core agnostic, and having parallel systems. So you still maintain your core, but you also are having these other innovative like platforms
Yep.
that are kind of running in the periphery. So, I mean, I think there's going to be a lot of discussion on the part of community banks on just even on core. What is our core provider doing what we need it to do? Do we need to switch our core? Can we layer in folks like Clarivis? Can we layer that in on the side, that kind of stuff. I mean, we just brought
Yeah.
a gentleman at SRM whose main goal is to help make those types of assessments, because I think that's going to be a big thing for community
Huge.
in the new year.
Yeah.
Yeah.
It's my core. I like to say the word of the, if you want to call it word of the decade, I think is agile.
Yeah.
How agile can you be with your current technology? Because things
Mhm.
are happening fast. So if something
Right.
changes in the consumer or the customer base preference, are you able to change relatively quickly with new technology
Hmm.
to meet those needs? Or are you stuck?
Right.
And there's not much you can do. The great firms out there can change pretty quickly or add or adapt. Uh, Going back to like a football term, audible. If you have to
Right.
audible at the line of
Exactly.
scrimmage.
Yeah, exactly.
Um,
And like I said, my colleague Jeff Ostheimer, we brought him on about a year ago, and his main thing is to look at those kind of projects and say, hey, can you meet your strategic goals with the existing core and the existing, connectivity, or do you have to kind of rethink how you put
yeah,
that blueprint together? Yeah.
and I completely understand it. That's a big investment, and from where you are as a community bank in your journey as a bank, you know,
Mm.
it takes the right leadership, it takes the right commitment, and you have to be able to kind of take that leap of faith. But like I said before, the alternative is kind of staying put,
Hmm.
and as the industry changes around you, and it changes quickly. I mean,
Right.
discussion I had over the last couple of weeks is the amount of baby boomers over the next 5 to 10 years that are going to retire, and the transfer of wealth that is going to happen. They say is going to be the largest ever in the history of the world, um, to their kids or grandkids or other people within their network, their trust. And how does this money, where does this money go? Does
Hmm.
it stay with the banks, the community banks? Does it move to fintechs? So there's a lot to think about right now from a community bank standpoint on how do I keep these customers? How do I reach out to their uh, kids or other people within their business?
Right.
And it's taking a long-term view. And I always think you should have that person who's looking 2 5 years down the road,
Hmm.
and then you have the other people that are working on today's issues. Because I think the banking system in the next 3 to 5 years is going to look even completely different from what it is right now, which is
Hmm.
completely different from what it was 5 years ago.
Right.
So
Yeah, I mean, if you
the
look at the timeline of fintech and the timeline of tech innovation, you had from like 1950 to 2000, just slow, slow, slow,
yeah,
slow, slow. You hit 2000 to, let's say, 2020, accelerated. Then you hit 2020 to the present, and it's just,
yeah.
exponentially, you know, accelerated, from
Mhm.
COVID to customer expectations, you name it, the pace of innovation has gone up dramatically.
Yeah. I think the two things, the internet really changed everything, of course, but the smartphone,
Hmm.
um, the apps. I mean, I read something that Gen Z, they do most of I think 50 to 80% of their banking is on an app.
Right.
So it's crazy. And yeah, the branches I think are still important somewhat. I think they're losing relevance probably year by year, but
Well,
it's
they're
still
being
good to know.
redefined and recast, right? That's
Yeah,
they're smaller. They are for a smaller amount of you know jobs and tasks are being done in the branch. More things are being sent out to the digital channels.
hmm,
I mean, there's certainly a role for branches, but probably fewer and smaller footprints.
yeah, yeah. There's always a role. It's good to know that you can walk in and speak with somebody, or if you have a question. Uh, I think it's giving the customer options. I always say,
Mhm.
if they want to do their banking at 2 a.m. while watching Mad Men reruns on Netflix, go ahead. If they want to go into the bank and sit down with somebody, that's great too.
But the funny
So
thing is, people at one point used to say, "Oh, well, you still have to have a branch for originating loans, signing documents, yada yada yada," right? But I know, earlier this year, I needed to get a equity line on my house. I did it completely online. The notary was even done through a Zoom call. So,
Yeah.
as technology finds ways to do more things remotely, yeah, the idea of what the branch is and what it means and its functionality is certainly going to change as well.
Yeah. Yeah. Well, this is any kind of final thoughts, Paul, heading into 2024? This year was if you wanted to put one word on it, was I remember you said something earlier. I forget what the word was, but revision or stabilize,
Yeah,
or there's something like that. If that was kind of the one word for 2023,
yeah,
2024, to me, it's really deciding what it's been important, of course, over the last 5 years, 10 years.
yeah.
But I think we're at the point where you really have to decide what you want to be as
Hmm.
a bank. It's a hard decision. I'm not saying it's easy. Um, what direction you want to take as a bank? Do you want to grow? Do you want to expand your business? Do you want to
Hmm.
bring more products to your customers? Or do you want to kind of just, stay the way you are and I don't want to say hope, but see
Yeah,
how far you can go, with the model you have now. But
yeah.
yeah,
I mean, my take on it is, I feel like 2023 was again was an adjustment period. I think
adjustment.
a
Yeah,
lot of folks took the last 6 months of this year doing just, what you said. They were assessing the environment, trying to figure out where they wanted to go in 2024 and manage the uncertainty. So what does that mean for 2024? I think you'll see more technology being implemented and woven into the fabric of the banking system, number one. You'll We talked about briefly about M&A, at the bankslate.com, I've written a couple of pieces, just using S4 filings to help people understand. Last year, there were a lot of banks that were in negotiations to do deals, and you had the rising rate environment, you had market volatility, stock prices going up and down, obviously the high profile bank failures, and a lot of these guys just hit the pause button for 2-3 months. Some of them were able to get back to the table, readjust the prices, and get deals inked. Some of them, I think, are still working on the math and still figuring it out. So I think, don't hold me to it, but I think second quarter of next year, we'll see more people, announcing deals. And then the other thing that we didn't really talk about, don't want to get too much in the weeds of it, is, a lot of folks in the fourth quarter are finally taking their lumps, selling available for sale securities at losses, putting that
yeah,
money into higher yielding securities, just repositioning their portfolio so that, number one, those losses are out of the way. They've taken their lumps. And number two, it removes an overhang and uncertainty, which can then either help them grow or help them when it comes to consolidation and M&A in 2024.
yeah. I saw a chart on unrealized losses for banks, and it was pretty daunting. Uh, so yeah, it's almost like you don't want to sell and take that loss, but you take the hit now, and at least it's not hanging over your head heading into
Yeah.
next year, and you
And a
can
lot of guys were
adjust.
smart enough to, they either, the Visa, some had Visa shares that they could sell to offset. I know that we've seen, not to get into it, a lot of insurance companies, insurance subsidiaries have been sold. The proceeds from those can offset those losses. So the ones that are really out there this quarter have been the ones that I think have been able to either offset the losses with other, one-time gains, or B, are able to articulate a longer term strategy of, yes, we're taking this hit in the fourth quarter, but we'll recoup that over the long run. So
Yeah, yeah. It hurts when you hit that button, right? That sell button and take a loss. But
and messaging matters
we
more
all
than
do it.
ever. And that goes back to also
Yeah,
in 2024, messaging,
messaging,
messaging matters more than ever, especially with social media,
communication. Yeah,
for sure.
yeah. That's another area. Having, speaking with a lot of banks, having a good, almost brand manager or somebody that's a new role. You have to think about,
Mm-hmm.
social media. What are they saying about your bank on social media? Reaching out quickly when there's an issue.
Mm-hmm.
Uh, like I said before, brand management is huge. So different channels that you have to look at, because a lot of people go to these TikTok brand management. I mean, the younger people, I
Yeah.
don't have it, but they go there for reviews. Like, should I? They put a bank in or something like that. Should I use Capital One? And then
Yeah,
you have
you
these
tick
like
off the wrong
he's talking about the
influencer.
reviews.
Yeah,
Yeah.
you tick off the wrong influencer, and suddenly that's a fire that you're having to put out because that stuff spreads like you
Like
wouldn't believe.
wildfire.
Yeah, yeah, like a wildfire. Yeah.
Yeah. It was like Silicon Valley was really the first Twitter bank run.
Yeah, that's
It
true.
just everybody was tweeting back and forth and they got worried and they pulled their money out quickly. Um, well, this is great, Paul. I always really enjoy speaking with you, whether it's recorded or not recorded.
Yeah, for
Like I
sure.
said, Bank Slate is one of my favorite reads every week. I get little nuggets that didn't even know about, very easy to read. So definitely check out Paul's Bank Slate. If you're in the banking industry or fintech industry, because
Yeah, and
I think
and
you
just
can learn a
remind
lot.
people, articles, Matt, it's thebankslate.com.
Thebankslate.com. And I'm a subscriber and I'm a happy subscriber. No, thank you, Paul. Thank you for your insights and continued success into 2024. But have a great holiday season and New Year, and look forward to talking more in the new year.
Yeah, same to you, Keith. The best part about these kind of year-end things is to see how much of our predictions actually come true, right?
Yeah, I was thinking about going back and looking at a couple of our previous with other guests I had
Yeah.
at the end of the year trying to predict. And yeah, the thing about prediction, I know there's a quote in there. I can't think of it right now, but it's like a fool's game. But
Mhm.
it's fun to predict a little bit. But
Yeah,
I think there's
100%.
some core predictions that are not even predictions, like the technology, like you said, M&A is going to
Mhm.
pick up. Those are predictions I think I would bet the house on. But
Oh, absolutely.
thank you, Paul. Thanks again.
Thanks again. Take care, Keith.
Bye bye.